Managerial Accounting Course Overview. Hello all. We're at the beginning of a semester during which we'll learn a lot of good stuff. Stuff that will help you with other classes on your plan of study, and stuff that will help you personally as well as professionally as future business leaders. The takeaways or must-knows from this introductory unit are 1. To understand the role of accounting in the decision-making process. 2. To know the difference between financial and managerial accounting. And 3. To understand the role of managerial accounting with respect to planning, controlling, decision-making, and directing and motivating. The primary focus of managerial accounting is on the communication of financial and operational information necessary to run a business effectively and efficiently to internal users such as managers and employees. The key to understanding the role played by managerial accounting is to recognize that managerial accounting is used for internal decision-making and is future-focused. Careers in accounting can take on 4 different paths: financial accounting, managerial accounting, audit, or tax. You have already been exposed to financial accounting, where you learned how to work with the accounting cycle by recording transactions in journals, posting the information to the ledger, recording adjusting entries, preparing financial statements, and closing the company's books at year-end. Regardless of the path taken, each area analyzes information, employs critical thinking to alternative courses of action, works to solve problems, and makes decisions which create value for the company and its stakeholders. So let's take time to introduce you to what managerial accounting is all about. Understanding the difference between financial and managerial accounting is best explained by looking at 8 different categories. The first category deals with users. With respect to users, financial accounting focuses primarily on external users, like bankers or creditors, investors, shareholders of the company, regulators, taxing authorities, and the community itself. These stakeholders are all interested in knowing how the company is performing. Managerial accounting, on the other hand, is pretty much limited to internal users like the managers and the employees of the company itself. The second category deals with reporting time focus. As far as reporting time focus goes, financial accounting is always based on what's happened in the past. We say it has a historical perspective because in financial accounting, you're talking about what's occurred recently, during the last month, the last quarter, or the last year. On the other hand, managerial accounting has a future focus. Managerial accountants are always looking to see how decisions made today will bring value to the company in the future. The third category deals with verifiability and relevance. When it comes to verifiability and relevance, financial accounting's emphasis is on objectivity and verifiability. With managerial accounting, the emphasis is on whether the information is relevant or not to the decision-making process. The fourth category deals with precision and timeliness. When it comes to precision and timeliness, the emphasis in financial accounting is precision. Everything must be accurate, supported by documentation, and balanced. The goal for managerial accounting is timeliness. Problems must be solved and decisions must be made as soon as possible for the business to be successful and create value. The fifth category is reporting focus. The reporting focus for financial accounting is company-wide. Reports communicate how the company as a whole is doing. The reporting focus for managerial accounting is on segments of the company. Reports are prepared on geographical segments, product segments, customer profitability, with the goal of determining who or what brings the greatest value to the company. The sixth category is rules. As far as rules go, financial accounting must follow generally accepted accounting principles, or GAAP. Managerial accounting, on the other hand, is not bound by GAAP or any prescribed format. This creates challenges for students, as you will find that there may be multiple ways to analyze and solve a problem. The seventh category is reporting requirements. Reporting requirements are very stringent in financial accounting. 8Ks are used to report on current events. 10Qs cover quarterly results, and 10Ks report annual performance. All have prescribed formats and deadlines which must be met. For managerial accounting, there are no mandatory reports, so we can design and develop our reports to meet our needs. The eighth category is information emphasis. Finally, financial accounting emphasizes information that is quantitative and objective, while managerial accounting looks at the qualitative side of things while focusing only on information which is relevant. When making decisions, managerial accountants must reconcile the quantitative results with the effect that the choices will have on employee performance, customer behavior, and stakeholder perceptions. The role played by the managerial accountant falls nicely into 4 different phases: planning, controlling, decision-making, and directing and motivating. The planning phase involves setting goals and objectives and specifying how to achieve them. The primary tools used during this phase are budgets, standards, and strategic plans. The controlling phase provides feedback on how well expectations are being met. Performance reports, which compare budget expectations with actual results, provide the input needed for effective decision-making. Variance analysis is used to compare actual results with company standards to determine whether performance results are favorable or unfavorable. During the decision-making phase, choices are made using differential analysis based on relevant data. Choices are made because alternatives exist. The goal is to look at the alternatives, concentrate on the relevant information, determine the differences which exist, and select the one which provides the company with the best opportunity to create additional value. The final phase is directing and motivating. We look at allocating costs, providing incentives, and developing performance metrics which provide employees with a clear understanding of expectations, as well as the motivation to perform at their best. As we proceed throughout the semester, you will learn how to solve problems and make choices. Choices like, should we make or buy a product? Should we lease or purchase a piece of equipment? Should we drop or add a product line? Should we process something further? Should we take on a special order? And how should we best manage resource constraints? Solving problems will play a key role in your successful completion of this class. The key to solving problems is to simplify, organize, and solve, what I call SOS. I will use the acronym BUCKS, B-U-C-K-S, to teach problem solving. We will box the question, underline the relevant concepts to work with, check the data that's needed, knock out the irrelevant information, and solve the problem. The key to problem solving is to realize that it does not start with number crunching. It starts by understanding the problem and the alternatives available. As we proceed, you will realize that we will focus first on learning the concepts and then we will move on to problem solving. All right, that takes care of the overview. Thanks for watching the video. Work hard, work smart. I wish you the best of luck in this class.